SEIS investment, Small Enterprise Investment Scheme. If you're a company seeking investment, your investor may have mentioned to you about SEIS, or you've read about it online. This is a government scheme. It's not a scheme in terms of tax dodging. It's a fully legalised government scheme to allow people to save tax. Let me explain how it works. If you're seeking investment for SEIS into your small company, let's assume you're asking for £100,000 from small investors. So this isn't institutions, this is normal people like you and I who are investing in companies. Under SEIS, you apply for a 50% tax rate rebate for the investors. Now that means they're only spending £50,000 when they invest their £100,000 in you. Great way to attract investment because they know they're getting a 50% discount almost on day one for investing in your company. The one thing to note is for SEIS, you have to have the tax liability in order to reclaim the tax. So for me here, I would have to have £50,000 of tax liability in order to reclaim that £50,000. You can take that down to complete zero, you can't go beyond zero. The application process is reasonably long-winded because the government wants to check the validity of all claims. You have to have a series of documents ready. You have to firstly have the name of the individual that's going to be the investor. You have to articulate what you're spending the money on. You then have to show financials to prove that you're going to invest in your company and not go and draw the funds and go and buy a brand new car. And then have some sort of longevity within a business plan to show that the company has a trading cycle and hopes to achieve more. But that's effectively how SEIS works. On the back of this, just to sort of give you the negative side, let's look at this as well. An investor may say to you, well, what happens if I give you my £50,000 after all the tax breaks and your business doesn't succeed? And we have to be realistic here. A lot of small companies do fail at the final hurdle, and there's only sort of 1 in 10 companies that reach a 10-year life cycle. So that £50,000, if your investor was a higher rate taxpayer, they would be able to offset further tax liabilities at the end of the demise of a company if it were to happen, sadly, and they'd be able to reclaim that through their personal tax return. Again, let's not linger on negatives, but if that is something you need to look at, we can talk at a later stage. But really, great way of getting money into the company, 50% discount, get your accountant engaged, get them involved, they can sort the process out for you, and it's fairly straightforward.